traders think every break is a break of structure. That's why their trade fails. The problem is not break of structure. The problem is structure hierarchy. So here in this video, I'll be showing you why a break of structure fails using multi-time frame structure alignment. And also we'll be teaching you how you can adjust this so you always don't fail on your break of structure. For this video, I'm using JPJ2Y. This is where most traders start getting it wrong. They come directly to their chart. The first thing they do is go on the lower time frame to analyze the overall context of the market. Analyzing the overall context of the market from the lower time frame, that is not a good hierarchy to follow. The first thing you should do when you come on your trade, now you can see, what you can see here is limited. So you are trading blindly if you should come directly to the market and you are trying to analyze from the lower time frame. This is where most of the failures begin. What you should do as a trader, once you come to the market, you should go on the higher time frame. What's the overall bias? What's happening in the market? Now on the daily time frame, you can see everything clearly. So I'm on the daily time frame and you can see the daily time frame bias. What can you see? You can see series of buys on the daily time frame from this particular point here. You can see days of trending. Now you know the overall bias in the market. So let's go down now to the 4-hour time frame. Mark out swing points. This is very important in the market. This is key swing points. Your swing points are places, there are zones which will help you to determine either it's a break of structure or it's just a fake out. This is where you get your structure right, when you use swing points to mark out or to determine your break of structure. And that's the reason why you have to go to the higher time frame, either daily, 4-hour, 1 hour is better time frame to mark out your swing points in the market before coming down to the lower time frame. Lower time frame should be mostly for your entry. Lower time frames should not be for your directional bias. So this particular market is bullish. So what are you looking for? You are looking for buys because the structure is telling you that the market is bullish. This is the controlling structure. So you trying to sell is kind of like you are going against the structure. And you getting internal break of structure, you are going against the overall bias in the market. Now let me drop to lower time frame. So this is the common mistake traders do. They mark out structures on the lower time frame using here as a break of structure. Watch this now as a break of structure. So they keep marking out on the lower time frame break of structure and they get to this zone. So they mark this as market structure shift. And this is not market structure shift. This is not market structure shift. Now what they are doing, they are trying to sell. Everything they see, they are trying to sell. So they are using internal structures as break of structure. It misleads them. So now you can see. So you can see, and this is not a market structure shift. This is just internal structure. We have internal structure and we have external structure. This is just internal structure shift. This you can see is internal structure shift. And as you can see, internal structure shift is not running the market. What's running the market is the overall bias. So the internal structure shift is just kind of like a mini zone in the overall context, in the overall bias of the market. You understand what I'm saying? So that's just a mini zone, which is the internal structure. That's not the overall bias in the market. So you can't call those ones break of structure or you can't call them a structure shift. Those are internal structures. This particular market structure you see is not structural. This is internal break. This is just internal market shift. So what we should always watch out for is the external, which is the overall context. That's the overall bias in the market. And we are using our higher time frame to determine that. So let me show you what qualifies a structural break. For you to be clear on this, I'll show you a structural break. What qualifies a structural break? What qualifies a structural shift? One what you mark out is your swing point in the market. Your swing. So this is a swing point here. Why is it a swing point? Because this is the last low. This particular low here is the last low that's created before the break of this previous high. before the break of this previous high. You can see it here. So we can now call here a valid break of structure. So we can call here now our protected low, which is the swing low. So you can see this has made the markets clear and structured. So all this you can see in here, there are internal structure. Any internal structure you see here must align with the external structure, which is the overall bias in the market, which is the buy. Anything you see selling is not in alignment with the overall structure, so you don't trade that. And let me show you this once more. Structure must shift. There must be a shift, not weak, not a weak. You can't call here a shift. You can't call this a shift. This is just a weak. So you can't regard this as a shift of structure. So now you are selling. No. The external structure is telling you we are buying. Buyers are in control of this market. So you can't call here a shift in market direction. You can't call here a shift in market direction. All you have to do is position for buy. You position for buy. These are internal structure. You position for buy. That's all you need to. You position for buy. Wait for your buys. You position for your buys. These are internal structure. And these are what you need to know. These are what you need to know. There are internal structures and there are external structures. So always follow the higher time frame bias. Then in the higher time frame bias, follow the internal structure, go to the lower time frame on the internal structure for your entry. When you want to get your entry, go on the lower time frame to get your entry. And once you want to know the bias, you go on the higher time frame to get the bias of the market, the directional bias of the market. Your lower time frame gives the entry and your higher time frame gives the bias. Once you see a lower time frame giving you a sell-off while the market is buying on the higher time frame, it's likely a pullback or is a trap, is a liquidity trap. The big players are using that as liquidity. Imagine the overall bias is buys and you are seeing this now pulling down. You're seeing the market pulling down. This is not the overall bias is buys already. So this is liquidity the market is engineering. So everyone who is buying here, everyone who is selling here is going to be used as liquidity. So you have to avoid that. Let me show you something here, very important here. So these are not valid break of structures. They are not valid break of structures. All this you can see, they are not valid break of structures. So these are fake break of structures you can see here. They are going to give you wrong direction in the market. So you can see that the markets pull back down. Then you call it again a change of character. Now you are trying to sell. So this is the most reason why traders get it wrong. So avoid all this. There are noise. These are noise in the market. Avoid all this. Always go on the higher time frame and know the bias in the market. And know your bias in the market. Go on the higher time frame. Then get your bias and stay calm. Lower time frame are always for what? For entry, as we have said earlier. Lower time frame are for entry. So you can see those are just liquidity the market trying to engineer. So you can see on the higher time frame there is nothing like break of structure there. This is a valid break of structure here. So you can call here a valid break of structure. You can see that. So for how I trade now, valid break of structure, what are you waiting for? I'm waiting for a buy around this zone. If you don't understand which structure is in control, every break will look tradable. This is the end of the video and I'll see you in my next video.